Recession or not, we've all got to eat. In the November 2010 edition of Word on the Beach, monthly market insights from Green Street Advisors, Jim Sullivan joins us to discuss grocery-anchored shopping centers. Jim, grocery-anchored shopping centers have a reputation for holding up pretty well during recessions. Has that been the case this time around?
Alan, you're absolutely right. Grocery-anchored shopping centers have earned a reputation for being defensive. And the reason for that is that during an economic downturn, people don't need to go to the mall to buy that extra sweater. They don't necessarily need to go to the power center to buy another big screen TV, but they do need to buy groceries. So in past economic downturns, grocery-anchored shopping centers have held up quite well relative to most real estate property types. This time around, things have been a bit different. People have continued to buy groceries, but they increasingly have been buying their groceries at places other than the grocery store.
It seems like everywhere you turn, specialty grocers like Trader Joe's and Whole Foods are cropping up. How is that impacting the strip center business?
Yeah, you're exactly right. We're seeing specialty grocers like Whole Foods, like Trader Joe's. We're also seeing a number of ethnic type grocers, 99 Ranch Market in California and Nevada, Fiesta Market in Texas that are targeted towards a very specific demographic. Those grocery stores have proven to be very popular in their markets. They draw a lot of traffic to the center, and that's very favorable for the owner of that center in terms of the rents that they can then charge to the other tenants.
Jim, we're also seeing the proliferation of discount retailers such as Walmart, Target, Costco, getting heavily involved in the grocery business. How is that impacting strip centers?
Yeah, well, as we touched on, they're absolutely affecting the grocer business because they have become very large and very credible competitors to the traditional grocery store. Walmart, for example, is now the largest seller of groceries in the United States. So the companies you just mentioned have had a very significant impact on the grocery-anchored shopping center business, in some respects in a negative way, but it's really forced the grocery-anchored center owners to refocus on their business, their grocery stores that they have in their centers, in order to be competitive and in order to fend off this very, very credible and large competition that's coming from the retailers that you just mentioned.
Jim, Green Street recently issued a report on grocery-anchored shopping centers. What were some of the key findings there?
Yeah, Alan, what we wanted to figure out is which REIT portfolios had the strongest grocery store anchors. So we dove into the data to try to figure out which grocers had the largest market share in their respective markets. And then we overlaid that grocery store strength against the portfolios owned by the REITs. And what we found was generally good news. What we found is that the REITs typically own properties that have the number one or number two grocer or a well-regarded specialty grocer in that market.
Any final thoughts, Jim?
The one big silver lining for the sector is the very limited amount of new construction that's taking place. Construction in the strip center world has really come to a halt, and that will be an important factor as we look 2 and 3 years out in terms of the competitive supply, the amount of space that is available to lease, and I think the lack of new development is a key issue as we look not next year but 2 or 3 years out.
Thank you, Jim.
Thank you.
For more on this and other REIT news and analysis, check out REIT.com. I'm Alan Kenny.